Afternoon traders, it's Niall from Learn to Trade the Market, bringing you another Forex price action trading setup video. Okay, today we're looking at the New Zealand Japanese yen cross rate, one of these carry trades. It's been selling off aggressively. The reason I haven't been online is website redevelopment and forum redevelopment. Please bear with me, that will be online within the next week. My web developers are away on holiday, and once they get back they'll be completing the project. So apologies for any inconvenience there. There has been a lot of setups forming. I just wanted to bring you one that I made in the last 7 days. I have been away, thus the lack of videos. Okay, if we look at the New Zealand yen, you can see it was breaking from left to right in a downtrend. There was a resistance point at 78.48 or 78.50 area, which was retested. I'll just zoom in and show you that here. Right there we had a pin bar that formed at that level at 78.50, also aligned with the 21-day EMA, which was sloping down, so we're staying with the trend. I've advised newbies to try and paper trade these setups and stick with the direction of the broader price action. In this case it was from left to right, it's in a downtrend, so we're going to be taking short entries. Alright, just briefly I want to explain the setup in a little bit more detail, where you place your stop, where I placed my stop and where I placed my profit target. Obviously you're going to be trading this at your own pace and at your own discretion. Some people like to aim for larger-ish reward. Personally I was looking for 4 to 1, and I'll just show you why. We had the high at 78.95 of the pin bar, and I waited for a little bit of a retrace up to test the 21-day EMA, which was also my other strategy of waiting for a 50% retrace of the pin bar signal. So it retraced up, I entered. After we had the confirmation of the retrace 78.45, I waited for prices to start falling away. I actually got filled. I'll just show you the account statement. Just have a look here. I had a fill there at 78.30 and 77.80 for a total of 6 lots. That's 6 large lots. And there's the profit loss, and I'll get to that in a moment. So I've entered twice as prices started to reverse back down off this pin bar signal. My stop loss was above the high of the pin bar, and it was roughly around 70 points. I averaged in on the way down. It's called pyramiding into a profitable position, and I looked for this logical level down here at 76, which was the previous close. Down here you can see what happened was prices started to come down in the pre-market this morning, and I just got out because prices moved so far from the close and the market hadn't even opened in Europe yet. So I locked in a nice $9,000 profit, and you can see that there, right there, closing 76.55. It's 9,000 Australian dollars profit. Now I just want to reaffirm the way that I'm looking at this is, when there's a trend, I'm going to try and follow it and look for price action in the direction of the moving averages, and the price action must be clean. So when I say clean, that's a very clean picture. We had support at 78.48. It was then breached and retested. On the retest, we had an alignment of the 21-day EMA and a pin bar. It doesn't get much cleaner than that. I've got one more example just to show you something a little bit similar. Okay, this is the euro dollar, and you can just see that the trend was moving down. It's under the 21-day EMA. It's respected it there, and then right there, massive pin bar, and then subsequent declines. So it just shows that when you do get a nice trend and prices are breaking lower below support, it's a really good time to start looking for those price action signals. And yes, there was a pin bar at the top here, and it formed against the trend, but then when you actually take the chart out, and I'll just show you that on a broader time frame, you can see that it did align up the top there with the previous high. So the pin bars work really well from really large levels in the market. A lot of the time the market will do a false breakout by 10 to 20 pips and then reverse, or you're trading with the trend and trying to align it with a level. And that's pretty much what I talk about in my new trading course. It hasn't been launched yet, but when it comes out, it's going to be a lot of interest because I really do clarify this in more detail. I have hours of talk time where I can, get into the nitty gritty of what's happening in the market and explain how I look at it. There is an element of gut feel with a lot of this, but again, there is something mechanical about price action and key levels and trends, which is, it's a prerequisite before you should enter any trades, to have an understanding of what's going on that chart. Anyway, I hope this video kind of put that New Zealand yen trade into perspective, and the euro dollar. I'll just quickly go down to the current price action on euro dollar. About 2 weeks ago, we had another pin bar, actually a gap down and a pin bar, which just resulted in a capitulation. I'm not sure if this thing's going to bounce. It's still well below the 21-day EMA. I wouldn't be surprised to see this thing down at 145 very soon. Obviously, all depending on the interest rate decision 4th of September for Great Britain and Europe. It's going to be a large catalyst for the market, whether we can bounce or continue lower. Okay, that's all I've got at the moment, and I'll see you next week, hopefully with a new website.